Why I'm buying XLM while everyone else sleeps on it. Everyone thinks XLM is dead. No hype, no influencers screaming about 10x, no trending hashtags, no sudden moonshots that make people FOMO in and wreck themselves 2 days later. Just flat, boring, sideways price action. And that's exactly why I'm buying. Because if you've been around this space long enough, you start to notice a pattern. Real assets don't explode when they're loud. They explode when they're quiet. The retail mind wants drama, big green candles, breaking news, and hype-filled narratives. But the smart money? They accumulate during boredom. They scale in when the crowd is distracted by the latest meme coin flavor of the week. That's where we are with Stellar right now. XLM is flat, emotionless, muted, and it's perfect. Because when a fundamentally sound asset consolidates for an extended period, while adoption metrics, partnerships, and ecosystem infrastructure quietly expand beneath the surface, that's not a sign of weakness. It's a classic sign of coiled potential. This isn't just technical analysis, it's market psychology. Let's call it what it is. Stellar is boring to most retail investors. It doesn't make headlines like Solana outages. It doesn't have a cult army like XRP. It doesn't promise trillion-dollar narratives like Ethereum's ultrasound money. What it does have is relentless, real-world infrastructure being built in the background. And that's exactly why it's so dangerous to the people sleeping on it. Because Stellar isn't designed to entertain crypto Twitter. It's designed to rebuild how money moves globally. This isn't a sprint. It's not a hype cycle game. It's a marathon, and XLM is being trained like a long-distance killer. Let's zoom out. While the retail crowd gets baited into pump-and-dump cycles, Stellar is becoming the quiet backbone of cross-border payments, real-world DeFi credit, and regulated stablecoin flows. We're not talking about possibilities. We're talking about deployed infrastructure, live projects, regulatory integration, and growing liquidity rails. And guess what? That's the kind of thing institutions love. Predictable, regulated, scalable, quiet. This is why the chart matters right now more than ever. XLM has held its range like an absolute machine. We've seen months of price compression between 10 cents and 14 cents. But here's the part no one's talking about. While price has stayed flat, liquidity has started to creep up. Order books are thickening. Whale wallets are reactivating. And volume is shifting from centralized exchanges to decentralized infrastructure. That's not weakness. That's distribution in reverse. That's accumulation. Think of it like a pressure cooker, heat building silently under the lid. No noise, no signals. But if you listen close enough, you can hear it. Something is about to break loose. Now, let me say this straight. Boredom is a buy signal, but only when it's backed by growing fundamentals. And as we'll break down in the next sections, Stellar's metrics are lighting up quietly across the board. While influencers chase dopamine and zero-value meme coins, XLM is positioning itself for a utility-driven breakout, the kind that doesn't announce itself with a tweet but punches everyone in the face with a 5x candle when it's too late to catch the move. You can miss it, or you can position early. Before we get into the on-chain activity, developer growth, and the smart money shifts happening behind the scenes, hit that subscribe button now. This channel isn't here for noise. It's here to spot real signals before the rest of the market catches on. Now buckle up. Because if you think Stellar's asleep, you're not paying attention. You want to know what's really going on with XLM? Forget the price chart for a second. Forget the FUD. Forget the silence on crypto Twitter. Let's talk about where the money's moving, because that always tells the truth. And what we're seeing right now, smart money is quietly, methodically loading up on XLM. It's not loud. It's not flashy. But if you track the data, the signal is crystal clear. Over the past 6 months, wallets holding between 100,000 and 10 million XLM have steadily increased. This isn't some fluke or random whale jumping in. It's a consistent accumulation trend, a slow, deliberate drip of mid to large positions being built quietly while retail yawns and scrolls past. Now let's break that down. A wallet holding 100,000 XLM at current prices is sitting on a $12,000 plus bag. That's not your average Deegan chasing pump coins. But when you start scaling up into multi-million XLM wallets, you're talking about $500,000 to multimillion-dollar positions. That's institutional. That's high net worth. That's VC-adjacent capital. That's capital with inside connections, long-term vision, and zero interest in memes. And here's what's more important than the size of those wallets. They're not trading. They're holding. Onchain Data shows a clear rise in the average holding duration of XLM. Wallets that used to flip tokens in a matter of days or weeks are now sitting idle for months. That's a behavioral shift, and behavior always precedes price. This is accumulation, plain and simple. And we're not just talking about passive wallet growth. The real smoking gun is where the XLM is going. In the last quarter alone, hundreds of millions of XLM have been pulled off exchanges. Let that sink in. Quiet outflows from Binance, from Coinbase, from Kraken, all moving into cold storage, multisigs, and institutional custody solutions. That's not your uncle trying to stake for 3% APY. That's conviction-driven capital, locking in positions for long-term plays. Here's why that matters. When you trade, you leave your tokens on exchanges. When you believe, you take them off. This kind of move tells us something critical. They're not buying to flip. They're buying to wait. They're front-running something. So ask yourself, what do they know that the rest of the market doesn't? Because this isn't the first time we've seen this setup. The last time XLM showed these exact same accumulation signals, a sudden rise in whale wallets, exchange outflows, and holding behavior, was back in late 2020. XLM was trading around 7 cents. No one cared. No one was watching. Then it exploded to nearly 80 cents in a matter of months. But here's the twist. Back then, Stellar didn't even have half of what it has now. No Soroban smart contracts. No DeFi protocols. No Palago Labs. No regulated stablecoin ramps. No integration with MoneyGram's fiat on/off-ramps. No global trade pilots. No programmable compliance tooling for institutions. In 2020, that XLM rally was fueled by speculation. In 2025, the next wave will be fueled by utility. So what are these whales seeing? They're seeing a network that's no longer just talking about real-world finance, it's executing it. They're seeing Stellar shift from a protocol to a full-stack financial rail. They're watching the quiet infrastructure upgrades like developer grants, Sorbon deployments, and liquidity corridors, and they understand what's coming. Because the smart money doesn't need hype to move. They move based on fundamentals, regulatory positioning, and timing. And right now, they're positioning before the crowd realizes what Stellar's becoming. It's not a bet anymore. It's a strategy. So if you've been wondering why XLM price is flat while everything else pumps, maybe ask the better question. Why are the people who actually win in this market quietly accumulating while everyone else sleeps on it? Stick with me because next we're going deeper. The on-chain metrics are just one layer. In the next section, we'll unpack how Sorbon's smart contracts, DeFi tooling, and Stellar's TradFi integrations are laying the groundwork for a price move that retail won't see coming until it's already underway. Subscribe now if you haven't yet, because this isn't the kind of content that waits around. Here's the truth about crypto. 99% of the market watches the wrong signals. They obsess over price charts, Twitter sentiment, and whatever the loudest influencer is yelling about that day. But if you want to spot the next breakout before it happens, you need to look deeper into the core metrics that actually signal real growth. Because while retail watches candles, the pros are tracking fundamentals. And in the case of Stellar XLM, those fundamentals are starting to flash green across the board. Let's break them down one by one. 1. Developer activity is surging. One of the clearest leading indicators of protocol strength is developer engagement. Not price, not tweets, not press releases, code. And right now, Stellar's developer activity is going vertical. Ever since Sorbon, their smart contract platform, went live, GitHub commits have spiked, pull requests are up, and grant funding proposals from builders are flooding in. But here's the key difference. This isn't vaporware. These aren't devs building testnet-only dApps that never go live. This is real deployment. Real smart contracts going live on mainnet. Real products shipping across payments, tokenization, DeFi, and cross-border applications. Builders are showing up because Stellar finally has the full-stack infrastructure they need, and it's working. Unlike Ethereum, which still struggles with throughput and fees, Sorbon offers devs compliance tooling, native scalability, and institutional-grade integrations out of the box. And the builders who understand that, they're not leaving, they're doubling down. 2. Wallet growth that actually means something. In just the first quarter of 2025, Stellar added over 500,000 new wallets to its network. That's not small growth. That's meaningful expansion. But more importantly, these aren't idle wallets. They're active. They're interacting with Soroban smart contracts. They're moving XLM. They're sending USDC cross-border. They're connecting to real-world anchors and liquidity providers. It's not just user count. It's user quality. And the network is growing where it matters most. In regions where financial access is broken and Stellar offers real solutions. That's organic adoption, not hype-driven spikes. That's what long-term sustainability looks like. 3. Token velocity is dropping, and that's a good thing. This one flies under the radar, but it's one of the strongest signals of all. Token velocity is down while wallet count is up. Let's decode that. Token velocity measures how fast tokens are moving between wallets. When velocity drops, it means fewer people are spending or transferring XLM rapidly because they're holding. And when you combine falling velocity with rising wallet numbers, that's classic accumulation. It means new holders are entering the market, and instead of trading, they're sitting tight. They're waiting, and they're doing it in volume. Even more telling, dormant XLM, tokens that haven't moved in over 12 months, are now at the highest level since 2019. That means the long-term holders, the ones who rode the bear market, are still here, still holding, still not selling. And that kind of dormancy, that's not apathy, that's conviction. 4. Stablecoin liquidity is quietly exploding. While most people are focused on Ethereum's TVL wars or Solana's meme season, USDC on Stellar is becoming a silent giant in the world of cross-border finance. We're talking about millions of dollars in daily flows, quietly routed through Stellar rails, especially across markets like Latin America, Sub-Saharan Africa, Southeast Asia, and even the Middle East. And unlike volatile DeFi volume that spikes during bull runs and vanishes during corrections, this liquidity is sticky. Why? Because it's not driven by yield farmers. It's driven by remittances, business payments, microloans, and actual real-world economic activity. These flows don't go away when sentiment dips. They're powered by necessity, not speculation. In fact, USDC on Stellar has now become a core liquidity rail for fintechs and money transfer services that need speed, compliance, and low fees. Ethereum can't offer that. Neither can Solana. And even XRP, for all its enterprise traction, doesn't have the same consumer-to-cash infrastructure Stellar now supports. Which brings us to the final metric. 5. The Anchor network is scaling globally. Stellar's Anchor system, the fiat-on-off-ramp network that connects the blockchain to real-world banks, fintechs, and money transfer outlets, is finally hitting critical mass. We're talking about MoneyGram, active in over 180 countries, integrated with Stellar for cash-in/cash-out USDC conversions. Tempo, powering Euro liquidity across Europe with real-time payments. Cowrie, handling Nigerian Naira flows in one of Africa's largest remittance corridors. Tala, providing microfinance access and wallet integration in underserved emerging markets. These aren't speculative partnerships. These are regulated entities running live fiat rails through Stellar, with real users converting real money every single day. This is what real-world adoption looks like. Not airdrops, not NFTs, not hype cycles, just invisible infrastructure that works. So now let me ask you this. If XLM was irrelevant, why is developer activity exploding? Why is wallet growth accelerating with active use? Why are more tokens being held, not traded? Why is stablecoin liquidity rising in the hardest markets to build in? And why are anchors expanding global reach with compliant cash ramps? The answer is simple, because the foundation is real. And it's being built right now under the radar. Retail's not watching, but the pros are, and they're moving accordingly. Coming up next, we're going to break down exactly why the traditional finance world is positioning around Stellar, and why XLM might be the most undervalued institutional rail in the entire crypto market. Stay tuned, and if you haven't subscribed yet, now's the time, because this isn't hype. This is the blueprint, the utility play that will blindside retail investors. Here's what most retail investors still don't get. The next wave of crypto growth won't be driven by memes, metaverses, or margin trading. It'll be driven by utility, real utility, and the layer 1 blockchain best positioned to ride that wave. It's not Ethereum. It's not Solana. It's Stellar. Let's be blunt. Most chains are still fighting for relevance by chasing trends. One day it's DeFi summer. The next it's NFTs, gaming, modular scaling, or AI on-chain. Meanwhile, Stellar has quietly built the rails for actual financial infrastructure. And now those rails are being used. Let's start with the most slept-on player in the entire institutional DeFi landscape, Palago Labs. Right now, Palago is piloting decentralized credit infrastructure on Stellar, specifically targeting the $1.3 trillion global trade finance gap, a market that traditional banks have largely failed to serve. Why does this matter? Because trade finance isn't theoretical. It's not a white paper fantasy. It's one of the oldest, most essential financial functions in the global economy. Without it, goods don't move. Businesses don't grow. Supply chains break. Palago is bringing that system on-chain, using Stellar's Soroban smart contracts to issue credit, manage risk, and facilitate cross-border settlement in near real time. That's not DeFi yield farming. That's real-world, compliance-first institutional DeFi, solving a multi-trillion-dollar inefficiency. And here's what most people still don't realize. This isn't just a pilot. It's a prototype for the future of capital markets infrastructure. And it's being built on Stellar. Now zoom out. While Ethereum is busy arguing about staking centralization and Solana is chasing TPS records, Stellar is solving actual financial bottlenecks. Cross-border remittances, live and active in over 180 countries. Microfinance, enabling small dollar loans through Tala and other fintech partners. Credit issuance, through Sorbon smart contracts with real KYC rails. CBDC development, with frameworks already deployed for sandbox pilots in Ukraine and other developing economies. Digital identity frameworks, tied directly to wallet infrastructure and compliance. That's not a roadmap. That's execution. And here's the part that makes institutions take notice. Stellar doesn't bolt on compliance after the fact. Unlike Ethereum, which needs third-party zkKYC protocols or privacy-preserving bolt-ons just to be considered regulatory-friendly, Stellar was designed with regulation in mind from day one. It has a built-in compliance layer. Anchors are KYC'd. On-chain transfers are traceable. Fiat conversions are auditable. And it's already passed the scrutiny of global financial regulators, not in theory, but in actual deployments. This matters because the next institutional wave is coming, and they're not entering a casino. They're entering a framework they can explain to regulators, integrate with core systems, and deploy at scale without running into governance chaos or legal ambiguity. That's why Stellar is uniquely positioned. Because the institutions that matter, banks, payment providers, credit networks, central banks, they're not looking for another Ethereum clone. They're looking for a blockchain they can plug into their compliance stack without triggering red flags. That's Stellar's edge. And it's massive. And here's what's coming next. Retail won't see this shift until it's already happened. They won't recognize the significance of Palago Labs, or the MoneyGram USDC ramp, or the growing stablecoin corridors in Africa and Southeast Asia, until those systems are the default. They won't understand why long-term token dormancy matters, or why active anchors are more important than NFT mint counts, until it's already priced in. Because that's how narratives flip. Retail chases hype. Institutions follow metrics. But once the use case is proven and volume starts flowing, the narrative flips fast, and the crowd rushes in like they always do. At that point, you're either positioned, or you're left behind. And if you're watching Stellar right now, with eyes on its real-world integrations and institutional inroads, you're ahead of the curve. The next section breaks down exactly how the traditional financial system is preparing to onboard blockchain, and why Stellar might quietly become its operating system. You'll want to see this, because this is where utility meets inevitability. Why I'm betting big on Stellar before the crowd wakes up. Let's close this out by getting crystal clear on one thing. This isn't just a trade. It's a calculated bet on where the next wave of real adoption is headed. Because when I look at XLM, I don't see a lagging altcoin. I see a coiled spring. The question isn't why I'm buying Stellar. It's how long before the rest of the market realizes what's happening. See, I've been in this space long enough to recognize the early signals. They're always the same. Developer activity starts rising. Institutional pilots begin quietly. Wallet growth outpaces speculation. Token velocity drops while dormancy rises. And real-world use cases start going live under the radar. It happened with Matic before its Layer 2 thesis became mainstream. It happened with Link before Oracle infrastructure was even on most people's radar. It happened with Solana before the Robinhood crowd even knew what a validator was. And now it's happening with Stellar. But this time it's different. Because Stellar isn't chasing hype or trying to win a popularity contest. It's executing a long game, quietly building infrastructure the world actually needs. Not just more decentralized finance, but better financial rails for the entire planet. Cross-border money movement, stablecoin-based credit, institutional-grade anchors, digital ID integration, smart contracts with built-in compliance. And here's the punchline. The crowd doesn't care yet. They're too distracted. Meme coins are pumping. Ethereum Layer 2s are shouting over each other. Solana's TPS is back in the headlines. Meanwhile, Stellar is onboarding real institutions, increasing utility, and building a network that scales across borders, not just blockchains. And that's exactly why I'm paying attention. Because I know how this goes. At first, the market ignores the signs. It labels XLM as dead. Says the price hasn't moved. Laughs at the lack of DeFi TVL or NFT hype. But under the surface, accumulation, infrastructure, adoption, maturity, and then something flips. Maybe it's a breakout partnership. Maybe it's a central bank deploying a CBDC pilot. Maybe it's USDC corridors crossing $1 billion in settled volume. Whatever the trigger is, the response is always the same. The crowd rushes in. But by then, it's too late to be early. Because early happens during the silence. Early happens when no one's watching. Early happens when price is flat. But the fundamentals are screaming. So yeah, I'm betting big on Stellar. Not because it's the trendiest name in crypto. Not because it's going viral on X. But because it's the one building a bridge between crypto and the real economy, and doing it with partners that matter. That kind of bet doesn't pay off overnight. But when it does, it pays off hard. And when it does, the narrative won't just shift, it'll collapse in on itself. From dead chain to undervalued backbone of cross-border finance. In the blink of an eye, that's how these plays work. By the time retail realizes what Stellar's been doing, the smart money will already be positioned. And if you've been watching closely, maybe you will be too. So if you're still here, still listening, and still hungry for asymmetric setups that actually make sense, hit that subscribe button. Because this channel isn't about hype. It's about seeing the move before it becomes obvious. And now you know why I'm all in on Stellar before the crowd wakes up.